your chart looks like this? If it does, you're actually trading blind. So let me show you how to clean this up in 3 steps. What's up traders, welcome back. Today we are talking about something nobody is teaching you in the right way. How to mark up your chart so you can actually know what to look for when you start your day. Not just pretty lines that are useless, but a real tutorial that will show you exactly what to look for. And by the end of this video, you will have complete plan you can use on every market. Now we will talk about the mistakes that people make the most. So traders mess up their chart before they even start trading. And I see 4 big mistakes all the time, and it has to be changed. Mistake 1 is too much stuff. You got 20 indicators, 50 lines, levels everywhere. Your chart look crazy, and when everything is important, nothing is important. Mistake 2 is nothing at all. The opposite problem, you're just using price with nothing else. So thinking you are pro, but when you miss the good levels and enter too early or too late and having no plan, things go wrong. Mistake 3 is always changing. Monday you use one thing, Wednesday you switch back because you saw new video, Friday you're back to the first one. So you never learn patterns because you never look at the same thing twice. Mistake 4 is you know the model, but you don't know where to start. So this is the biggest one because you understand the concept, but when you open a chart in the morning, you freeze and you don't know where to begin, what to mark, and what time frame do you use. So you will end up staring at the blank chart unsure of the first step. So if you are facing any of these mistakes, don't worry, today it will be all fixed. All right, here's what you need, okay? I call it 3-layer system. Each layer has one job. We are not just drawing some random stuff, we are drawing things that it will lead us to the end result. So layer 1 is market structure. So this is your map. This tells you where you are and which way you should trade. So step 1 is mark your bigger time frame trend. I use daily, 4-hour and 2-hour chart, and then I search for the higher highs and the higher lows for the uptrend and lower lows and lower highs for the downtrend. And yes, don't forget to use this on the daily, 4-hour or 2-hour time frame. Now, how do you know which time frame to use? Very simple. If the daily doesn't give you enough information, then switch to a lower time frame. Simple, right? Step 2 is don't zoom out too much. When you are on the higher time frame, you don't need to zoom out too much. We don't need the past candles. We want to know what the price is doing right now. So many people go wrong here. They zoom out too much and start drawing some random stuff. So then things go wrong, not focusing on what the price is actually doing right now. Step 3 is mark your last swing high and swing low. So this is your building blocks where you will continue building on. Foundation is what to look for. Marking your last swing high and swing low is the building blocks, and there are still more layers that need to be done. Then after marking your last swing high and low, I put small line and label them as SH and SL to understand where am I and what to look for. Okay, that's it for layer 1. Keep it simple. Layer 2 is the range. Step 1 is before I take any trade, I need to know in which range the market is in for the day. So I start on the higher time frame and I look for the aggressive move in the price. At the same time, I identify the last swing high or swing low that was broken. Why? Because that tells me if the market is in a push phase or entered in a loading phase. Step 2 is switch to a lower time frame. Now after you know that, switch to a lower time frame, for example 30-minute or 50-minute. Lower than that, I don't recommend it because it will mess up your chart and the structure will look crazy. So then look for the range that you are in currently. So step 3 is understanding push phase versus loading phase. Now I watch what the price does next. If price continues breaking structure and keeps making new highs, we are still in a push phase. But if price stops breaking highs and start breaking back through the internal lows, the market has entered in a loading phase. Step 4 is finding the active range. I focus on the range price is currently in. This is so important. So for example, okay, I did miss the trade when structure changed from loading phase to push phase, and today I want actually to take a trade. So you will need to find out in which range you are in, because obviously you don't want to take trade against the short-term trend. And that's the range, so you need to find out in which range you are and what to wait for. Because trading is one-click button. So you need to make a plan before clicking this one button. So as you see here in this picture, there is bearish range and bullish range. And don't forget, push phase is long-term bullish trend. So I will wait for the bearish range to be done. Then I will take my trade. I wait for the market structure shift inside the loading phase. Only then I do use gamma to find out the key levels and order flow to execute in the direction of the next push phase. Now we are at the final layer, and that's the final checklist. So this is what you mark before the trading day starts. This layer tells you exactly what to watch and where to pay attention. So the first one is mark your bias direction. Is the market bullish, bearish, or consolidating? So mark this clearly on your chart. This is your macro bias, the big picture direction. Then mark your range for the day. So are we in a loading phase or are we in a push phase? Label this on your chart so you know what type of price action to expect. Then mark your micro bias. So now on the lower time frame, what's the short-term direction? So this is your micro bias. It might be different from your macro, and that's okay. Mark it clearly so you know if you are trading with or against the large trend. Then mark your alert levels. These are the levels where you will pay attention, not trade levels, but watch levels. So when price hits these areas, you wake up and start looking for confirmation. For example, gamma and order flow. Now mark your confirmation areas. These are where you need to see a reaction, like your gamma levels. If price gets here and reacts, you have confirmation. If price ignores these levels, you stay out. And that's it for layer 3. Now your chart is complete and you know the structure, the range, and exactly what to watch. Now let me show you how this works for you. I'm gonna mark up this on a chart from scratch and you will see how fast and clean this is.
Okay, so now I'm on a real chart on BTC chart. So the first thing what I'm gonna do is switching to higher time frame. For example, the daily time frame. And if daily it doesn't give me enough information to read this market structure, then I will switch to lower time frame, for example, for our time frame. And then the second thing is I don't need to zoom out like this, okay? I need to zoom in this area to analyze this area and take trade inside this area. So this is the first thing that you want to do before starting your day. So now you need to analyze what the macro bias is. Macro bias is long-term trend. So you need actually to read the higher highs and higher lows, and what the price here is doing, it is making higher highs and higher lows. So macro bias is bullish. Then second thing is you need to understand in which phase you are currently in. But before that, you need actually to mark your last swing high and last swing low. So now I did mark my swing high and swing lows, okay? So we have here actually example on BTC. So this from this area to this area is push phase, and then from this area to this area is loading phase. And in the loading phase and at the ending of the loading phase, we want to see market structure shift on a lower time frame, for example 30 minutes, 50 minutes, and then taking our trade. So then taking our trade and targeting this swing high. But if price continue breaking this swing high, it will actually go higher and higher, and this is our swing trade. Now after price did break this swing high, so this was our new push phase because price was above this last swing high. So this is our push phase, and now we are actually in a loading phase. Now we did analyze where the price is currently in and in which phase we are in. Now after I know that, now you're gonna switch to lower time frame, for example 30 minutes, and from this area you want to see market structure shift on the micro bias. So micro bias is short-term trend. Now what we are seeing here, price is making lower lows and lower highs, so that does mean price is bearish. But if we will take buy trade, then we want to see actually here price is making on the micro bias bullish trend. Then we will take our trade after we do confirmation with the gamma levels and order flow to understand who's in control, and then we will take our trade. It's very simple. So before that, you can also use alert levels, and that's how you actually can analyze the market and taking a trade. Now we're going to the gold, and we want to analyze what the gold is doing right now. Find out what the macro bias is, and as we see here, so price making higher highs and higher lows, so that does mean macro bias is bullish. And in which phase range are we actually right now? We want to actually, before that, marking our swing high and swing low. So we have here swing high. Okay, we have also here a swing high. So now we have two swing highs, okay? So here, price from this area to this area, it was the push phase, okay? So this was the push phase. And then from this area to this area, it was the loading phase. And then inside this area, you want actually to go to the lower time frame, for example, 50 minutes. And here we are not seeing any market structure shift. So we will go to the lower time frame. Now we will use lower time frame 5 minutes. So we are still not seeing anything. So I'm going to the lower time frame. Okay, now we are seeing market structure, okay? So after this down move, we start seeing bullish structure. So this means loading phase is about to end and push phase is about to start. So here's also a picture where actually I did take my trade inside this area. So you actually understand what I'm talking about, and that these things what I'm talking about is actually real, and you can actually take in trade that are swing trade. So that's it for today. If you have questions, comment below this video, and see you in the next video. Peace out.